Welcome to Talk Tickers, where we break down the earnings calls that move the market. Today, we're diving into SkyWest's Q3 2025 results. Now, this one was interesting. When the numbers first hit, the stock actually dipped after hours, but that's not where the story ended.
Because the very next day, the stock ripped higher, up more than 5.5% on some pretty heavy volume. So what gives? What did the market suddenly figure out overnight that it missed just a few hours earlier? Well, let's unpack it, and we'll start with the results themselves.
And really, to put it simply, the results were just plain strong. Let's look at the headline numbers and see how they stacked up against what Wall Street was actually expecting.
I mean, just look at the quality of the beat. SkyWest pulled in GAAP earnings of $2.81 a share. The consensus? Way back at $2.56. That's a huge beat. Revenue also came in strong at over $1 billion, beating by 3.5% and up a solid 15% from last year. And my favorite number here? That operating income, up an incredible 33% year over year. So the big takeaway is that these weren't just some flimsy headline numbers. The actual underlying business was firing on all cylinders. But you know, great earnings are only half the picture.
The other half is what management is doing with all that cash they're bringing in. And I think this is where the market really started to wake up and connect the dots. To see that, we've got to turn to the balance sheet.
That number, $2.4 billion, is SkyWest's total debt right now. So why is that so important? Because at the start of the year, it was $2.7 billion. In fact, this is the lowest their debt has been in over a decade. Get this, management has paid down $1 billion in debt since the end of 2022. That is a massive statement about their financial discipline.
And this is what I love to see. They're not just paying down debt, they're also playing offense. While getting their balance sheet in order, they also spent nearly $27 million buying back their own stock. And they actually bought back 25% more shares than they did in Q2, really leaning into that market volatility. So you've got deleveraging plus opportunistic buybacks. I mean, that is a classic recipe for creating real shareholder value.
Okay, so we've got fantastic earnings and a balance sheet that's getting stronger by the quarter. But what about the future, right? That's what the market really cares about. And this is where the confidence really started to build when you look at the strategic moves management is making right now.
You can see they're making progress on so many fronts at once. That United CRJ200 extension, that's huge. This is a fleet that a lot of people thought was just going to be phased out. Instead, they've locked in its earnings power for years to come, well into the 2030s. Then you've got the final DOT approval for their charter service. That's a whole new business line opening up. And all this is happening while they're still growing their modern E-175 fleet and expanding their relationship with American.
And you know, the CEO, Chip Childs, he really just hit the nail on the head. It all comes down to one word: flexibility. By extending the life of old planes, adding new ones, and starting a whole new charter business, they've basically built a system that can pivot to meet whatever their big airline partners need. And in this industry, that kind of optionality is just incredibly valuable. Okay, so with all of that in mind, the strong results, the solid balance sheet, and a really clear strategy, the big question on everyone's mind is, what's next? What does management see coming down the pike? Now, SkyWest doesn't give super formal official guidance, but on the call they gave some very direct color, as they call it. They basically see full year 2025 earnings coming in somewhere in the mid $10 range, which implies about $2.30 for Q4. But here's the kicker. They gave a clear bridge into 2026, saying they expect earnings to grow to around $11. That signals that this wasn't just a one-time great quarter. This is sustained earnings power. And of course, the professional analysts who live and breathe this stuff, they took notice. You can see TD Cowen, for example, jumped on it the very next day. They reiterated their buy rating and jacked up their price target to $132. That's the kind of validation from Wall Street that really gives the market confidence. All right, so let's put all these pieces together. You have the big earnings beat, the smart capital strategy, the new contract wins, and that really clear guidance. So what's our take on all this? It's time for our final analysis, the next call.
Our official rating here at Talk Tickers for SkyWest is outperform. We think that big positive reversal the day after earnings, well, that was just the beginning. We see a much larger re-rating of the stock happening as investors finally start to digest just how long this company's earnings runway really is.
So what are the key things you need to watch from here? Well, first, it's all about execution. They've got to hit that implied $2.30 in Q4. That's the next big test. Second, keep an eye on contract momentum. We're looking for news on their new charter business and where their unassigned E-175 jets are going. And third, just watch for more of that great capital discipline. Continued debt paydown and buybacks should put a really strong floor under the stock price.
So, to wrap up our core thesis, it's this. We believe the market is still undervaluing the durability of SkyWest's earnings. That CRJ extension gives them a super stable cash flow bridge, which in turn allows this really profitable transition to the E175s to play out. As the market fully prices that reality in, we expect the stock to continue to outperform.
This is not financial advice.